Hey guys, Useful Yields here. Today we're going to be looking at my portfolio for the week as usual. So yeah, let's get started. So starting off in the heat map for the S&P 500, we can see here it's kind of a mixed bag of positive assets and negative assets, um, such as financials kind of got killed except for asset management, software application. What is this one? Information technology systems, stuff like that, consumer staples. So certain sectors did better than others. So it wasn't like a full red week or a full green week, but overall, not too bad. Um, so yeah, let's take a look. So Webull, actually it's gone down quite a bit, another $34. Sorry, 163.47 on that one. Um, Not exactly sure what to do, to be honest, because I keep losing money on this. But in my head, I'm like, if I sell now, I'm solidifying $163, and that like super large loss. But if I just literally forget about this and like let's say 5 years from now, as long as this symbol doesn't get delisted, uh, let's say 5 years from now, MSTR just hits rock bottom. This could potentially be worth something. I don't know. So I guess like for me in my head, that's what I'm using as an excuse. But hopefully it pays off. Now going into finance, we have $15,685.32. Um, let's see, starting from the 13th. Sorry, from the 6th. I believe we got. Okay, looks like we only got one dividend from AMT, I believe. So there's that. For $1.40. But going into the portfolio for the week, we are up. The highest one being semiconductors at 3%. The most performance being from AMD. And yeah, in energy, we also had a pretty good week. You can see here that we've got, what is it? Mostly in CVX growth, a little bit in XCOM, and down on ENPH. What's funny though is ENPH is above its target, which I think would indicate that this has gained more, and you can actually see it has. This is at 460, and the other ones are at 411. So yeah. And last but not least, healthcare. Yeah, 2% in Vertex and 1.5% on Eli Lilly, which I think last week Eli Lilly was down, so that helps quite a bit. Internet healthcare is still down, which sucks, but yeah. As far as the top three, or the lowest three, we have financials, um, kind of balanced across the board. Well, Visa and MasterCard down about 3%. Consumer staples, the worst one here was Procter and Gamble, but not too far off was Coke. And then industrials, we have $1.86, or sorry, 1.86% and 1.64% on Honeywell and different companies. So that is it for the M1's finance side of the portfolio. Not too shabby. So on Composer, doesn't really say a whole lot, but I try to do a week at view. You can see how this performed. Apologies, my throat is kind of scratchy, but the Simon's KMLM switcher is up 7% for the week. These other two are up around 0.39%, and I believe that's mainly because they were holding QQQ the whole time. And then 3x Beefier is down almost 6%, which I'm actually kind of surprised about. It's currently holding. This just changed, I think, on Friday, so it was holding different stuff. But right now, our holdings are TLT on the Simon the Simon switcher, QQQ, IYX, or sorry, IYQ, and SSO, right? The good news is this. So if we go into funding here, we can see here that I'm actually up about what, like $150, $160 from the amount I put in. So now I'm actually back positive, which is very nice. And you can see a lot of that growth is from the top one, Simon's KMLM switcher. So you can see here that we're, what, $140 up, which is nice. Here we're about 20 and about the same here. We're down $18 here, which sucks, but it's not the end of the world. All right, moving on to the last part of the video. So, as always, I keep track of the daily performance of each of these, but I also do the weekly, so you can see how this is weekly. So the S&P 500 lost about 0.28% or $57, while we were up about 1% or $182, which is pretty cool. So from the top, you can see we're up about $500 from our contributions. We are down about $1,100 from the SPY portfolio, but not too bad. So yeah, I also made a new page that I am trying out, which is basically it's essentially a comparison between the two portfolios, a little bit more in depth. So hopefully this all works decently well. Anything that's green basically just means that, that side of the portfolio had won. So you can see on Friday, the portfolio had lost because it was lower percentage. So we lost more. But in terms of the 7-day and 30-day, we're actually up off the S&P 500. Another thing I should mention is this is from May 19th. So all of these numbers here are going to be a little bit skewed towards SPY. So there's that. You can see annualized percentage, or CAGR, we can see is 169 compared to 36. Even that's really high. One percentage is 66.67%. This basically just means the number of days that we had green. Doesn't really matter at what percent, but just above zero. Average win and average loss, those are self-explanatory. So you can see here, the S&P 500 seems to have higher average wins and lower average losses, which is very good. For the S&P 500, they have the average percentage across the board is this. So higher on the S&P 500. Largest win would be 2%. And largest loss 1.69%. So yeah. Also, this is our entire portfolio. I should mention this is not just Composer or Webull or M1 Finance. This is our entire portfolio. So current drawdown is 0.35% on SPY, but max drawdown, there was actually a longer max drawdown, or a worse max drawdown on SPY than there was our portfolio. The annualized standard deviation, aka volatility, it seems obviously like S&P 500 is less volatile, which in my books is a better thing. For what we're doing, we're trying to do a buy and hold kind of thing. You can see the Sharpe ratio is actually a little bit higher on this buy compared to portfolio, but the Kalmar is a lot higher on our portfolio than it is SPY. So yeah. These are hypothetical returns based on a initial investment of $10,000 starting on May 19th and using all of those returns to basically calculate them. So this also should ignore all of the contributions. Hopefully I set it up correctly. This one was a little bit hard to wrap my head around, but and we also have a drawdown chart, which you can see here. So it seems like recently, it's actually been in a higher drawdown than our portfolio has, which is very interesting. Despite that, we are still behind on a lot of these. We're behind on all these averages and stuff, but surprisingly, we're up on more of the annualized percentage, which is what we really care about. At the end of the day, I don't care about the averages. So, anyhow, that is about it for me. You can see here, I did change this thing to have the contributions as a dotted line, so it's just easier to see. So you can see here our portfolio values there, and you can see the gap between S&P 500 and our portfolio. So, yep. But I think that's about it. I think that is about it for the week. I don't really have anything to say going into the next week. I just obviously hope it does well. I think we're in a good position in a lot of our funds here, especially on this side where you have TLT. I'm kind of curious to see how fast it's going to switch out to TLT, switch out of TLT. On both of these, we're holding QQQ still. So as long as, tech does good, we're fine there. And on this, we have IOI, K, and SSO. So hopefully it does well there as well, because this one needs to catch up to the other ones. Otherwise, it's getting chopped off the block. I'm going to try to hold that one for a little bit longer, obviously, but we'll see. Anyhow, guys, that is it for me. And as always, I wish you guys well with the future.